Optimism that the Republican tax plan will pass the Senate this week drove the Dow to fresh record highs above 24,000, up 3% in the last 5 days. Optimism in US equity markets improved further with signs that the Republican administration is close to getting the votes to pass the much talked about tax bill. Boosting chances of success, Senator John McCain threw his weight behind the bill, and a vote is expected before the end of the week. While questions clearly remain as to whether corporate tax cuts will be permanent, market sentiment rallied into the end of the week. Also adding to optimism in financial markets was testimony from Fed Chair Janet Yellen before Congress's Joint Economic Committee. Yellen deemed the economic expansion to be increasingly broad-based across sectors as well as across much of the global economy. A final reason for markets to be more upbeat was an upward revision to third quarter GDP from 3 to 3.3% on signs of increased business investment. This optimism on the US economy saw bond yields rise, with 10-year yields hitting a one-month high of 2.43%, and 2-year yields are up by 50 basis points since the end of September. Money markets have fully priced a December rate hike and another by June of next year. Westpac has long forecast the December rate hike to be followed by June and December of next year as well. While this positive growth picture would normally be good for pro-cyclical currencies like the Australian dollar, the sell-off in the front end of global yield curves has actually been one factor that has hit the Australian dollar in recent weeks. Yield spreads between interest rate swaps in the US and Australia have fallen below zero for the first time since 2001, reducing yield-related demand for the Australian dollar. All this despite another good week for Australia's key commodity prices. Steel markets in China have seen strong gains in the last few weeks as pollution-focused production cuts has boosted the price of rebar, which is used in construction, by 16% in the month of November. And this helped iron ore up by $10 over the last month, above $68. On top of this, coking coal, used in blast furnaces across Asia, was up by $50 in November on strong Japanese demand, better than expected Chinese demand, and outages at the Dalrymple Bay coal terminal in Queensland. The last time coking coal prices were above $200 a tonne was back in May of this year, when Tropical Cyclone Debbie flooded rail networks. Oil prices were also supported by OPEC's decision to extend production caps through to the end of next year, helping Brent remain above $60. The Australian dollar has spent the last week ranging between 75.50 and 76.50 as yield compression has offset this much better picture for commodity prices, and it looks like this story will probably continue into next week too. Now, next week brings a heavy run of US data, culminating in the all-important non-farm payroll report next Friday, and it's a busy week here in Australia too, with Q3 GDP on Wednesday. The better-than-expected CapEx report earlier this week points to an improved outcome, and Westpac's currently forecasting 3.1% year-on-year. We also have retail sales data on Tuesday and merchandise trade data on Thursday. And on top of all the above, we do have an RBA policy statement on Tuesday, though no change is expected there. These are all factors we'll talk about in next week's Markets Update.